Nigeria's naira is gaining strength, but what's driving this rebound? The Central Bank of Nigeria, Cbn, is said to have injected about $8 billion into the foreign exchange market to stabilize the local currency. But this has raised questions about the government's commitment to its 2023 decision to allow a market-driven exchange rate. Critics have, however, described this as a policy somersault that could undermine investor confidence. So, is this a prudent course correction or a return to unsustainable monetary policies?
In June 2023, the Central Bank of Nigeria, CBN, adopted a controlled floating system, allowing the naira to find its true value through market forces. The objective was to attract foreign investment and eliminate the inefficiency of multiple exchange rates. However, barely a year later, the Apex Bank has reintroduced direct intervention. The Managing Director, Chief Executive Officer of Lagos-based financial derivative company, Bismarck Rwane, who spoke during a television interview, attributed the steady appreciation with the naira to the CBN's intervention. Rwane noted that without such measures, the local currency would have continued its free fall, further destabilizing the economy. Economic experts, however, argue that this contradicts the spirit of liberalized forex markets.
So it's challenging because I think it's a policy somersault. Policy somersault because we had expected from Mr. President's speech and the CBN Governor, Cardoso, that it's expected that the voice of demand and supply will regulate the market, determine the true value of our naira. It's a challenge, sadly. But again, it was part of what we criticized the Emefiele's government for doing. But we want to see that naira has its true value. If you ask me personally, I think the actual value of naira to dollar should be around 1,100, 1,200.
But for this professor of international economic relations and a former CBN official, the intervention is a necessary measure to safeguard the nation's currency from extreme volatility.
Well, it's not a policy somersault. Let me say this and actually send a very good note to everyone that is watching us. Central Bank sees more than what we are seeing. By design, Central Bank is expected to be responsible for managing the macroeconomic policy objective via the monetary policy. And therefore, in a very good central banking system, it is totally separated and expected to work alone.
Critics, however, hold a different view. They say the naira's recent appreciation is artificial, warning that without structural reforms, this intervention may offer only temporary relief.
You're depleting our perhaps excess crude account, our foreign reserve, to manage the naira or control the naira to dollar fluctuation. But for how long? It's unsustainable, clearly. But again, another issue you look out for is the CBN understands that businesses are already stifling. Businesses are suffering. Importation, exports is impacting heavily on the economy, impacting heavily on inflation.
But Professor Aremu insists that intervention was inevitable. According to him, no central bank in the world allows total market control without some form of regulation. The CBN had to act. End of quote.
Please let me warn everybody that even dollar is fluctuating in the market. Even, say, what do you call it? The euro is fluctuating. Even pound is doing the same thing. There is no currency in the global economy that totally maintains the same level over time. They fluctuate within a band. It is when that fluctuation is actually going too high or going so low that we expect Central Bank of a country to intervene. And that is why Central Bank is intervening in terms of the injection of some billions of dollars that are put in the economy. And if anything happens like that, Central Bank will have enough monetary tools to be able to actually, intervene again.
The initial implication of this is that Nigeria's foreign exchange reserves have been declining. Trust Bank Financial Group Limited reports that FX reserve fell by $300.11 million week on week, reaching $38.74 billion, marking the sixth consecutive week of decline. Further checks show that since peaking at $40.92 billion on January 6, forex reserves have shrunk by $2.2 billion, according to data from Bloomberg. Economic analysts caution that frequent policy shifts create uncertainty, making foreign investors hesitant. While forex stability is crucial, they warn that increased dollar supply without corresponding productivity gain could trigger inflationary pressures.
The framework agreement. The framework agreement says you have to have your coordinating at the REX level. And that is why the African Payment and Settlement System, to be able to implement after, has not come on board and has not been effective. They need to go into all the 8 regs. Make sure the ones that are ready with their payment system, those ones that are not ready, look at what we can do to make sure they are ready, and then we can use that approach to be able to sell across Africa. Want to buy something from Kenya? If you just debit my account in naira and credit the account of the Kenyan man that is exporting to me in Kenya shilling, and that's all. And trading will be moving. So I want to see Central Bank of Nigeria actually be at the forefront of this, not pumping money into that area without actually saying what they need to do in that area.
For the CBN, experts emphasize the need to remain apolitical and provide sound economic guidance to the government. Ultimately, beyond forex intervention, Nigeria is faced with the challenge of addressing the root cause of naira volatility, boosting local production, increasing export, and attracting long-term foreign investment. The key question remains, will Nigeria sustain this instability, or is another currency shock imminent? Landry Babalola, AIT News, Abuja.
As part of effort to boost